How's it going, everybody? Chad here. I just want to give a quick update on the current stock market situation. A few months ago, I made a video basically explaining that could be a potential stock market crash sometime in 2015 or 2016. And a few weeks ago, I made a video basically laying out how it could happen potentially this fall, September, October period for various reasons. I hate making predictions on economic predictions and timing them. It's very difficult to time. However, the evidence sort of projects that there could be a potential crash sometime in September, October period. I have gotten things wrong before. Do your own research. Don't take my word for it, but I definitely did nail this recent crash that happened a couple weeks ago, and it's kind of the start of the larger shoulder and the head and shoulders patterns that I point out in the last video. Now, if any, you don't need to know much about technical analysis, but you could look it up. Head and shoulders patterns in technical analysis are pretty reliable stock chart patterns, and they're one of the most reliable. So, basically, I want to make a point to point out that we're basically building the right shoulder right now in the head and shoulders pattern, and the buy the dip crowd is creating this rally. Recently we had a mini crash. The Dow was down pretty much every day a couple weeks ago, and then on Monday it crashed down 1,000 points. The Dow was down the most points daily ever Monday, and then it recovered 900 points, so it was only down 100 points, and then it ended the day down 600 points. So very volatile trading. And now we're getting basically the buy the dip crowd. And it's important to pay attention to the sentiment of this buy the dip, because if you read various articles and stuff in the mainstream media, basically they're saying that you should buy the dip, this crash is over, this is not 2008, the economy is doing fine. I read articles saying, my name is Steve, I'm down 3.7%, who cares? Basically, the article's premise is that the stock market's going to be up a few months from now, and you can't get every market right in the timing. That kind of psychology is just, it really reminds me of the top of 2007, 2008. The optimism in that everyone just kept saying, this is just a dip, this is just a dip. The housing crisis is going to be contained, etc. And that's basically why I think the right shoulder is going to, complete itself sometime in the next few months. So if this rally starts to, piddle out a couple months from now, we still could see a fierce rally from here. It's it's August 29th, I believe, today. We could rally into Labor Day. And basically, we're going into this fall period with this right shoulder being formed, and the Federal Reserve is either going to raise interest rates potentially in September or December. Now, the Fed just had their Jackson Hole meeting, and they're, confusing the heck out of everyone. Each one is saying different, each member is saying different things. Some of them are saying, let's raise rates, who cares with the market volatility. Maybe by the end of September, maybe they do raise it, a quarter of a point. Who knows? It's anyone's guess. It doesn't matter. They could raise it a trivial 0.25%, 0.5%, whatever it is. But, the economy can't function without more quantitative easing. The stock market can't function without more quantitative easing. I looked at a chart a couple days ago. The correlation between the Federal Reserve balance sheet and the stock market run the bull market that's ran up till now has a 97.7% correlation. You can't say that the Federal Reserve is basically responsible for making this market go up. When they buy garbage off of banks' balance sheets, student loans, mortgage-backed securities, credit card debt, when they buy that stuff, the stock market just goes up because it creates artificial demand in the economy, $85 billion per month forever, and they just stopped last October. And if you look at the numbers since October 2014, that's kind of when the recession sort of started. So, the interest rates are still at 0%, but the economy and the stock market, in my opinion, need QE to function. So this right shoulder is probably going to blow down to 12,000 on the Dow, which is a pretty significant move down. And I believe the Federal Reserve will step in at some point, who knows when. But for now, this rally is basically, I think, the last time to get out of the market until this thing crashes. And, we could potentially go down to 2008 lows. And, I think the Federal Reserve is going to step in before that. But, if they don't react, this thing probably will go down to 2008 lows, because this reflation has been so artificial that anytime there's an artificial boom, the bust wipes out all the gains and then some. It's like a pendulum. It swings one way, and then it swings back the opposite way, with the same force. And so, right now, personally, I think this is time to get out. And this market is totally unsustainable. I may be wrong on the timing, but long term, this thing can't work. It's just mathematically impossible, and a third grader can figure